Among the African countries with the highest GDP over time, Ghana has been ranked as the 8th biggest economy in Africa, according to the World Bank's report. The report is focused on the GDP growth of African countries in 2020, where Ghana is placed on 8 in Africa and Nigeria on first positions. Ghana's economic growth can be largely attributed to oil production in the last 15 years. With an economic size of $72.4 billion, Ghana has seen a consistent expansion in its economy. Following swifter GDP growth in Q2, available data for the third quarter points to a robust activity. Although economic activity moderated slightly in August to September, it still posted double-digit growth in annual terms, while the private sector PMI remained in expansionary territory through Q3. Turning to the current quarter, available data continues to paint a positive picture. Now, domestic activity was likely propped up by more upbeat consumer and business confidence in October, while the private sector PMI averaged higher in October to November compared to Q3. Lastly, after detecting the country's first cases of the new Omicron variant, authorities have tightened restrictions for all travelers. Starting from December 12, all foreign visitors must be fully vaccinated in order to enter the country, while Ghanaians arriving at or departing from an airport will be required to receive a jab. Now, according to reports, Ghana is one of the few African countries that witnessed a marginal growth of 0.4% in 2020 after the global economy was battered by COVID-19. It has had a growth forecast of 4.8% in 2021 and an average of 5% for the next 4 years after swift recovery in the hotels and restaurants, as well as manufacturing subsectors and a boost in exports. Ghana's performance in 2021 is still being computed. I am Lekan Onabanjo, standing in for Tolulope Adele Balogun. Welcome. This is Business Edge. And joining me on Business Edge is Benjamin Ato Quansah, a financial analyst, even as we consider how Ghana's economy performed in the year 2021. Happy New Year to you, Benjamin. Thanks for joining us.
Thank you very much for having me, and Happy New Year to your viewers.
All right, now Ghana's debt risk leaves little room for an expansive budget, and thus it needs to focus on boosting revenue to fund fiscal gap. Do you think that Ghana can achieve that? Do you think they have the capacity to do that?
Certainly so. I think that this question in itself is a testament of the sad nature of the economies in Africa. The allusion to the fact that in order for governments to be able to embark on actions that expand their economies, that they must be able to borrow in itself I believe is very unfortunate. But to expand an economy, governments must be spending more, or must be seen to be spending more, and as such increasing the supply of money in the economy, in the system. Now, for any government to be able to do this, the money must be available in the first place. The government of Ghana, among other things, is currently undertaking ambitious projects to widen its tax nets and to so that the tax nets covers the entire populace. The first one is the Ghana Card project. This is a project that is being undertaken by the National Identification Authority to build an all-inclusive database for every Ghanaian in the country. This will aid in widening the tax nets and hence increase government's revenue. The second one is the e-levy, which Parliament is currently at an impasse with regards to approving this component of the 2022 budget. It has its drawbacks, but in the likely event that it passes, government will be able to generate phenomenal amount of revenue through the growing volumes of digital transactions that take place on a daily basis. This is in addition to other projects that the government is undertaking to improve industry, to improve manufacturing, and all the other things to encourage investment into the country.
You talked about Ghana spending more, which also has to include the payment of its loans. Now, according to Bloomberg, investors are actually concerned about Ghana's ability to service its loans, with the average extra premium sought on dollar securities sold by governments now said to be at a distressed levels. Now, could this situation make Ghana's bond sales perform poorly, and how do you think that narrative can be changed?
Well, I guess this question takes any critical thinking government to the beginning. Like, why are investors seeking a premium on government of Ghana bonds? And the answer is very simple. The risk coefficient on the government is deemed to be high because Ghana's debt levels are outrageously high and deemed to be unsustainable. Ghana's current debt to GDP ratio is about 75% as of the middle of last year, around July. And this is expected to climb slightly higher when the official figures for the end of the year are released. The only way for the government of Ghana bonds to perform better will be for the government to reduce the perceived increased risk by reducing its borrowing and increasing its revenue generation. With the above projects that I've just mentioned, this is likely to be realized sooner than we anticipate.
All right. Now, Ghana's one of the challenges Ghana is faced with is the issue of collecting revenue, something it is trying to address with the use of a digitized system. Now, according to reports, the nation's tax GDP ratio is forecast at 12.9% this year, compared with 24% in a peer country like South Africa for 2021-2022 period, and 40% among high-income nations. Now, what are the plans that you will suggest for Ghana if it hopes to raise revenue, if it hopes to generate revenue through taxes?
Well, I guess to buttress the point that you're also making is the fact that of the 30 million people in Ghana, only about 1.5 million of them are registered taxpayers. This is far from the ideal situation. It is unfortunate, however, that instead of the government focusing on increasing this number, the current project that it seems to be undertaking with respect to its tax policy seeks to increase tax revenue by overburdening the existing registered taxpayers with even more taxes. Some strides are being made with the introduction of the Ghana card, but until this is done, the tax burden of the entire nation will be borne by just a few. Now, just to give a little background to what the Ghana card and the e-levy that I mentioned above is going to do. The e-levy is simply a tax that is going to be charged on all electronic transactions from mobile money into some bank transactions. It's a 1.75% charge on every amount that is transferred within a day, and that is above 100 Ghana cedis. This tax is expected to generate revenues in excess of 6 billion cedis. So if it is passed, it will increase the government's revenue mobilization. The Ghana card is also, just like I mentioned, going to put everybody on a database so that where people are not covered by the tax net, this will provide enough information for the various tax authorities to be able to go after the much needed tax revenue.
Well, we understand we have issues with taxes, bond sales. That is Ghana anyway. But then economists expected Ghana's 2021 GDP growth to be below the target of 5%. Judging by your own estimates, do you think that was actually achieved?
Well, it's difficult to say. There have been a lot of volatility in international markets, and every country has had its fair share and has been affected to some degree. Now, apart from the 2020 GDP growth rate, which was sub 5% for obvious reasons, coronavirus, the government of Ghana has always exceeded this 5% target in recent times. It is worthy to note that despite the effects of the coronavirus lingering on even into 2021, there was some good recovery, which is likely to contribute positively to the growth in GDP. And with 2021 growth rates of about 3.1%, improving from there won't be very hard. It will be very, very simple, and 5% is likely to be achieved.
All right, a bit of positives coming from you there, Benjamin, but then you get to stay with us. We get to continue the conversation after this break. Well, the Ghanaian economy is said to have performed quite well in 2021 despite the outbreak of the Delta variant. Well, thanks to the fiscal support by the government. But then after this break, we get to find out what government policies and initiatives helped some critical subsectors of the economy to drive GDP growth in the country. It's still Business Edge. Stay with us. There's more to come. Still with me is Benjamin Ato Quansah on Business Edge. He's a financial analyst, and we have been reviewing Ghana's economic performance in the year 2021. Now, back to you, Benjamin. According to the data from Ghana Statistical Service, the crops, education, trade, repair vehicles, household goods, manufacturing information and communication subsectors of the economy were said to be the main drivers of the GDP growth for the third quarter of the year 2021. But we'd like to understand, were there policies, initiatives that actually gave the impetus to these subsectors that you think should be sustained and improved upon?
Well, I don't think it took a lot of conscious efforts in terms of policies from the government to cause the GDP growth rate from these specific areas. I think a lot of the growth that we saw coming from education, crops, etc., were as a result of a period of recovery from what the country had been through as a result of the coronavirus pandemic. Remember, schools had been closed for a long while in 2019. In fact, general levels of activity had gone down in 2019 because of the coronavirus. And so as the economy began to recover, because the coronavirus had been seen to be not as serious as initially perceived, it gave a lot of room for these subsectors of the economy to contribute largely to GDP growth rates. And so it didn't really take a lot of deliberate effort from the government for growth to come from these areas.
All right, now looking at the operations of these subsectors, consumer prices in Ghana rose to a seasonally adjusted 0.61% from the previous month in October, ticking down from September's forecast, which was 0.64% increase. October's results was chiefly due to slower price growth for food. That's according to report. Now, did Ghana experience any form of disruption or dire situation as the case may be, in its supply chain?
Well, the rise in consumer price index was chiefly due to the persistent rise in petroleum prices in the international markets. Unlike other oil-producing nations, which enjoy a lot of subsidies in terms of petroleum products and the impact that rises in prices have on their consumers in the country, Ghana is very much left to the mercy of the international market. So prices at the pump, for example, increase as and when international prices also increased. And so until the Omicron variant of the coronavirus hit, causing the prices of diesel and petrol to tumble, we had been consistently seeing that prices had even gotten to a point where they were higher than pre-COVID levels. The pervasive impact of prices of fuel to all other prices cannot be overemphasized. Again, for a country like Ghana, supply chain was fairly stable with no significant disruptions. But rises in transport costs, for example, for consumer products definitely did have an impact on the rise in CPI.
Okay, now the IHS Markets Purchasing Managers Index for Ghana came at 51.0% in November, unchanged from the previous month's result and remaining above the 50-point threshold. Now, from that report, how would you say that Ghana is actually faring in terms of its PMI?
Well, the HIS Purchasing Managers Index affirms the fact that the Ghanaian economy is still ripe for business and investment. If you look at the policies the government is putting in place to solve the problems that have been identified for some years now. For example, the intermittent power outages is seeing improvements in recent times. Government is also keen on improving revenue mobilization, especially in this new year, and that hopefully helps to save the country from dangerous and unsustainable debt levels. Some of these revenue mobilization strategies I have mentioned in previous questions. Policies like the One District, One Factory are still ongoing, planting for food and jobs, all of these things that are supposed to increase investment into the country and improve the manufacturing sector and industry as well in the country are still ongoing in full force. And this, I believe, is what helped to put the index of Ghana above 50 in this recent report.
Well, there are so many things that the Ghanaian government is doing to improve its economy, and at its final scheduled meeting of the year on November 17 to 19, the Monetary Policy Committee of the Bank of Ghana voted to raise the policy rate by 100% basis points to 14.50%, marking the first increase in 6 years and surprising the majority of market analysts who had widely expected the bank to stand through 2021. Now, has the economy recovered enough for this? And what do you think needs to be done to actually maintain the tempo?
Well, the economy, first of all, does not have to be fully recovered before the central bank tightens its monetary policy. We have seen inflation rise to its highest levels in about 16 months so far. Currently, our latest figures released by the Ghana Statistical Service show that inflation was around 11%. The raising of the policy rate is just a strategy to arrest this rise in inflation and maintain it within the acceptable bands of 6 to 10% by reducing the attractiveness of borrowings and hence tightening the money supply of or the supply of money in the economy. I think that for government to be able to maintain this tempo of around 14% as it is right now, a lot of emphasis needs to be placed on making sure that we as a country and the population is not as battered as it currently is by fluctuations in market prices of fuel and international commodity prices. Once the government is able to implement policies that will shield the people of Ghana from some of these volatilities, then the effect of inflation on a lot of the things that we do over here will be less.
And so finally, Benjamin, we understand that the next meeting is slated for January 25 to 28 this year, and with a decision to be made January 31. But then looking at the year 2022, we're in it already. What are your predictions? What are the things that you think Ghanaians should be looking out for in terms of economic improvement policies and initiatives?
I think that first of all, revenue generation by the government is going to improve. I've mentioned two strategies that the government seeks to employ to make sure that this is done: the Ghana card and the e-levy. Now, these two strategies are just revenue improvement techniques on the taxation side. Now, when it comes to the other aspects of revenue mobilization by the government, industrialization is still ongoing. One district, one factory is still ongoing. Government is putting in policies that make investments into the local economy very attractive for both foreigners and local. We expect that these will continue into the future. We also expect that the monetary policy is not going to change significantly, especially as we have seen a slight drop in commodity prices in recent times. We expect that inflation is also going to go down slightly with it as transportation cost of goods and services also reduces. Generally, we expect that government is going to put in more effort, especially as the current government has just 3 years left on its mandates to keep governing the people. It is in its interest to make sure that the economy is improved and the lives of the people are improved along with it.
Thank you so much, Benjamin Ato Quansah, for joining us on Business Edge. Do have a wonderful year ahead.
Thank you too very much, Lekan.
In 2022, Ghana's economy is set to grow at a faster pace as activities continue to return to pre-pandemic levels. Economists hope the country will build on a robust growth recorded across all sectors in 2021 to drive the momentum. And that's about it for this part. We'll be back in a bit for NC4 to watch. Do stay with us. It's now time to bring you NC4 to watch, and we start by telling you that Tanzania is asking for help to reduce loss on some farms, and to do that, donor agencies have been reached out for support over a deadly banana disease recently detected in Kigoma region. The resources are to be spent to map out the disease spread across the country so as to ease containment measures. Experts will also be tasked to develop biosecurity measures and control strategies suitable for smallholder farmers. The United Arab Emirates is seeking to tap into the financial muscle of rich Africans and other investors around the world from friendly countries in a shift in strategy meant to recover from the pandemic by profiting from warm ties. The details are contained in a special prospectus for an upcoming investment conference in March 2022, in which the Emirati government wants to cement its role as an attractive destination for Africans seeking to diversify their investments. Let's also tell you that the Nigeria Labour Congress has raised the alarm over what it described as an international conspiracy working with local collaborators to keep the Nigerian economy and people perpetually on their knees through the underdevelopment of the country's downstream petroleum sector. The Labour Union has also claimed that about $9.5 billion have been spent on the turnaround maintenance and greenfield refinery projects since 2012 without government being able to resolve the crisis of mass importation of refined petroleum products into Nigeria. Finally, the United States has removed Ethiopia, Mali and Guinea from access to a duty-free trade program, following through on President Joe Biden's threat to do so over alleged human rights violations and recent coups. The Biden administration said in November that Ethiopia would be cut off from the duty-free trading regime provided under the U.S. African Growth and Opportunity Act due to alleged human rights violations in the Tigray region, while Mali and Guinea were targeted due to recent coups. And that's it on the maiden edition of Business Edge for the year 2022. Do not forget, you can follow us on all social media platforms. We are at News Central. You can also engage us via our website, www.newscentral.africa. And you can also download our mobile app on App Store and Play Store. Until next time, I am Lekan Onabanjo. Do have a fruitful 2022.